were very concerned about inflation back in March. And Gen Z, people aged 18 to 24, had the highest rate of very concerned about inflation at 52%. Larry Summers also got this right. Sachs, what are your thoughts on inflation, which now seems acute and permanent?
Right. Well, it's definitely not transitory. Remember when it was at about 5.1% over the summer that the administration said, no big deal. This is transitory. Don't panic. Then it went to 6.2. Now it's 6.8. Looks like it's headed to 7%. And the real problem here is that these guys, the administration, have not adjusted course in light of this data. What they've tried to do instead is now speciously claim that the same bills that they had written and conceived, the Build Back Better bill, somehow, even though it was conceived at a time that was really deflationary, that somehow this is going to fight inflation. They're essentially repurposing. They're just changing the arguments they're using as opposed to changing their legislative priorities. And really, Larry Summers made this point all the way back in February. I think this is worth reading what he said. He said, there's a chance that macroeconomic stimulus on a scale closer to World War II levels and normal recession levels will set off inflationary pressures of a kind we have not seen in a generation. He said this in February. Everyone in the administration dismissed him. All the liberal economists that you mentioned basically derided him. He turned out to be exactly right. And he was just saying this about the roughly $2 trillion they passed back in February for COVID stimulus. And, since then they passed $1.2 trillion for infrastructure, and now it's this another $5 trillion for Build Back Better. So, the real problem here is that they are not adjusting course in light of this data that keeps coming out that inflation is a bigger and bigger problem.
So what's the right thing to do in your mind, Sachs? And then we'll go to you, Chamath.
Elon said it, can this bill? We don't need it. This is not what Biden was elected to do. He was elected to provide normalcy, stop the chaos. And he never got a mandate for this kind of, whatever, $10 trillion of tax
we've been wanting to do an infrastructure bill for a long time, but we didn't. That was prior to pumping so much stimulus into the system. If he had just
done the infrastructure bill and not the Build Back Better, it would have been one thing. But this is basically the third hyper stimulatory bill that they've sought to pass. First, they did the COVID relief bill at a time when really the economy didn't need that stimulus.
I mean, and then just dovetailing this, and get Chamath involved in this, is the jobs report. November non-farm payrolls increased only 210. They expected it to be 573. So it's a big miss. However, kind of a missed bag because there's over 11 million job openings, and we're now at 4.2% unemployment rate, which is the lowest, which is getting towards the pandemic lows. And this is like before the 2008 financial crisis. Chamath, how do you reconcile inflation along with this crazy, bizarre job situation where people will not go back to work, people are planning on resigning, there continues to be resignations, and there's too many job openings, and people are raising salaries and still can't hire people?
Well, I think we did a pretty good job of unpacking the Great Resignation. I think it was last pod. So, right, remember, there are three structural issues at play in the jobs front. One is that you have this really meaningful under-immigration that's happened because of Trump. The second was you've had a big mismatch between the degreed classes in America and the jobs that they can have for what they think they should earn, meaning you go to school, you get into all this debt, you try to become a teacher or something, and then you realize you can make more at an Amazon warehouse. Crazy.
Strange.
And then the fourth is you have all these boomers with an enormous amount of savings, 30, 40, 50 trillion dollars, who are pulling forward their retirement and also subsidizing their kids. You put it all together, there's less of an incentive to be in the job force unless you pay higher wages. Now, let's just put a pin in that for a second. I think the thing that Sachs talked about is really important, which is that we have to really figure out whether inflation is transitory or it's persistent and it's here. And I just want to bring up, Nick, I'll send you these the Twitter links to this, but Bill Ackman tweeted out these two things today, which is that if you...
Fan of the pod.
Brilliant investor, by the way. Great human being, brilliant investor. Two very specific things. He actually called out something that we also mentioned before, which is that CPI is horribly calculated and it's really imprecise. And if you unpack CPI, there's something...
Price Index.
The Consumer Price Index. There's something in there, a component of it, that's very important, which is called the owner's equivalent rent, right? How much can somebody basically charge rent to other people? The way that they calculate that, which is 30% of the 30% of the calculation is they just survey a handful of people. The problem is you don't need to survey because the actual exact data is available from single family rentals that report this number. So their survey showed basically a much, much smaller increase than what the actual increase is. And let me just give it. So the largest owners of nationwide single family rentals are reporting a 17% year over year rent increase.
Wow.
The OER that was calculated, quote unquote, by survey in the CPI was 3.5%. If you flow that through, it means that core CPI actually went from 4.9% today to actually 9%. And the CPI print, which was 6.8%, was actually 10.1%. So it just goes to show you we have sources of data that the government is not in a position to collect or measure. We have horribly inaccurate econometric models that we use. You know that phrase sort of shit in, shit out. So unfortunately, you get very bad
garbage in, garbage out.
You get very bad, crappy data. And now all of a sudden we're printing numbers. We're supposed to make policy against those numbers, but the numbers that underlie this decision making is fundamentally flawed, and it's flawed in the wrong direction.
Okay, let's bring Friedberg in.
And so I think, Jason, while you might make the argument that companies and jobs are being created, that is one of many places where, you overflow a river and lots of streams start to flow. We're seeing asset bubbles everywhere in NFTs, in crypto, in startups, in new ideas, in home prices, in everything.
Sneakers.
Now, the problem with inflation is, it's a definitionally, we all use this term and we throw it about, but inflation is really the measure of price going up over a period of time. And generally, you want to have inflation of some amount that allows you to see economic growth and expansion, that allows you to fund the debt that you used to create that growth in the first place. And so without some sort of an inflationary pressure, which is the output of economic growth, you end up, being unable to meet your debt obligations, and then things get really ugly. And the system, as it was constructed, because most of these governments and systems like we have today are funded by debt. So, Stan Druckenmiller gave a good interview in Q2. He was kind of on a roadshow, sounding the alarm bells around what was going on. He was saying the market is not speaking right now because basically the Fed kept canceling the market signals with their interest rate policy. And by canceling those market signals, it seemed like we had a free-for-all at the government level to keep spending. And so I do think that these two are pretty interrelated. The fact that we've kept interest rates low have allowed policymakers to say, you know what, the cost of debt for this government is zero. We can do anything we want. Just like consumers are saying, we can do anything we want. We can buy anything we want. We can spend any way we want. And as a result, we're kind of seeing this, inflationary pressure persist. Now, the problem is if you then raise rates and you can't borrow that money and suddenly people have to start to pay that debt down without economic growth having occurred, the whole system goes bankrupt. So the challenge that the Fed has is how do we raise rates without triggering an economic recession? And if people have overspended and are over-levered once again, and rates go up, it's going to get really ugly really fast. And so this is a first derivative balancing act. There's no simple and easy solution, unfortunately. Meanwhile, technology is causing deflationary pressures, which is exactly, maybe what you don't want to see happen when you're trying to realize economic growth. And that's, The
other thing that we talked about is that the Fed basically changed the government changed the rules on the percentage, basically what qualifies as a conforming mortgage. Remember that? And so now that's basically at $1 million. And if you think about it, most Americans, 80 to 90% of their true underlying wealth is their home, to the extent that they've built, a positive net worth. And if you all of a sudden, push up the upper bound on what a conforming mortgage is to $1 million, that effectively means it's roughly about 20%. That effectively means that you're moving people's net worth up by about 4 or 5%.
That's right.
And so if they take that and then they take that money out of their home via a HELOC or an equity line of credit, right? Home equity line of credit. And then, to your point, Friedberg, they spend it or they invest it or they, it could be a real disaster scenario in 5 or 6 years' time.
By the way,
no, this is more like 1929 kind of crazy.
Yeah. By the way, if you go back remember when we were in the depths of the market collapsing and everything, when basically the economy shut down with lockdowns when COVID started. And I was speaking to a senior banker at that day, and he told me, look, it's pretty simple what's going to happen. the Fed's going to drop interest rates to zero and they're going to pump money into the system. Because that's the only way you're going to be able to keep asset prices from collapsing. And we're going to artificially inflate asset prices. And we're going to do it for a long time. Because then people look at the stock market and they say, oh my gosh, stocks are going up. Oh my gosh, revenue is going up. Everything gets inflated by pumping money into the system. And the problem is, while there's a perceived, you keep saying the home price goes up and I keep saying stocks go up. But the purchasing power that arises when the inflation is higher than what those things are going up at indicates economic recession underlying that inflationary bubble. And the circumstance needs to be analyzed, unfortunately, a little bit more deeper than that, which is it's not just about inflation. It's about, have we pumped enough money in to trigger economic growth that we can come to balance where the growth can outpace the inflation? And we're not there.
It seems like there was a mispricing of certain equities.
And it wasn't a mispricing. The Federal Reserve forced a lot of institutional investors to be out as long dated as possible in buying earnings. Because if you have to remember, it's not just that real rates were effectively zero, but if you wanted to own inflation protected securities, it was actually a negative yield. So we were destroying people's savings. And there are a lot of institutions that must own some of these inflation protected assets. So we were already in a negative yield environment. What are those folks supposed to do if they have to fund an 8% return a year to pay the pensions of, good people, firefighters, teachers, it's, you name it, policemen, etc., right? They were forced to invest in the kinds of funds that would then go out further and further out into the future to buy the promise of future cash flows. And when all of a sudden a whole bunch of other assets that they held, which were supposed to be safe, implodes on them, right? Because all of a sudden inflation changes and the front end of the yield curve goes whoop, and all of a sudden all these assets, when yields go up, prices go down. Now the fireman's pension is like, oh my gosh, we just lost all this money we never thought we were going to lose. And we're long all these, crazy tech stocks. And so then they're forced to sell so that their overall exposure goes down. That's called degrossing, okay? And we've been going through a very painful process of this degrossing. Hedge funds are doing it in droves. And I think Biden is, and will ever be a really moderate, down the middle centrist. I don't think there's ever been an extreme bone in that man's body. He has always come off at, the word that I think when I've always thought of Biden, even now, is equanimity. The guy is a really down the middle person. He's not an extreme individual. I think that's the only kind of personality, by the way, that could have thrived for 8 years as a VP with Obama and had been in every room in every meeting. The problem, Sachs, and tell me if you think this is totally off base, is that there was a head fake after he won the presidency where there was this fake lurch to the progressive left. And it turned out that it was a complete head fake because that whole cohort of people just totally jumped the shark. Because all that rhetoric then unfortunately turned out to be not worth much. It started to blow up in their face in every single election that's happened since then, at the local level in cities, at the state level in places like Virginia. And in the middle of all of that, I actually think what happened was that faction tried to push an extremely aggressive legislative agenda to paint Biden as the next Roosevelt, which maybe he didn't even have the desire to be, because I think that he seems a very low ego kind of person. And now we're actually realizing, oh my gosh, this makes no sense. And so the part of why I think the markets are kind of like hand-wringing is you would expect at this point the federal bureaucracy to actually step in. But I think there's like a real lack of confidence because, for example, today, when there's a CPI print of somewhere between 7 and 10%, the only Democratic sounding, the talking point was one of the squad proposing a 4-day work week. I mean,
right.
That is insane. That's guys, like you're in crazy debt and you're like, what we should do?
Guys.
We should spend more money and work less.
When the CBO says we're about to go $3 more trillion into debt, the solution isn't to I actually think if you want to work less. Maybe you're lucky and your boomer parents can give you money, but there's a bunch of us like me who had to grind. I didn't have anybody to fall back on. And if you all of a sudden passed a law that said, hey, Chamath, you can only work 4 days a week, I would be really angry because you're depriving me of 20% more of a chance to beat all those other soft candy asses that went to all those fancy schools that weren't willing to work.
Yeah, ignore. That's the stupidest suggestion.
Let me work.
So I think this proposal that came out to basically this was a new proposal that they were going to limit the work week to 4 days a week. wouldn't let people work 5 days a week. The reason why it's a bad idea in general, but it's a particularly sort of a brain dead idea to propose during sort of this inflationary period, because again, inflation is caused by too much money chasing too few goods. Well, so you have a demand component from the pumping and the stimulus, but you also have the supply component, which is we don't have enough goods and services. Why? Because we've been, passing out these stimmy checks that disincentivize people from working. We have problems with the ports. We have these COVID restrictions that have all gotten in the way.
Restaurants are closing 3 days a week because they can't
so we've
find
had a shortage
servers.
So we've had a shortage of goods and services. So the last thing we need is a 20% reduction in the number of work days and work hours that are available. So it just shows like how out of touch these progressive